Good morning, guys. Welcome to this Tuesday, April 1st. April Fool's Day. Should I pull something off or not? Don't believe anything I say today, right? Anyways, just be aware, guys. April Fool's Day. So yesterday was one of those days which it's just volatility off the charts, I would say. So we had a pretty volatile day. Started off pretty weak, ran down, almost tested the lows on the ES, and did take out the lows on the Nasdaq. Then a massive retracement trade, right back up again. So today is just a matter of seeing what the market is going to be doing. I mean, I'm not. It can go either way. I mean, I'm thinking that we're still not done seeing the lows, and or attempts to take it lower at least. But it's anyone's guess. But we are down in low end territory, and it's a pretty weak market overall. Yesterday's trading, we'll see if we can hold on to the little gains they had there. We have a level right here at the 5600s to watch. If that comes out, we'll be in some trouble again. But before we get started, news this morning, we have nothing at 8:30. At 9:45, well, we have a speaker at 10. So at 9, that's Tom Barkin. At 9:45, we get PMI manufacturing. At 10 o'clock, we get ISM manufacturing. PMI at 9:45, ISM manufacturing at 10, construction spending and job opening, JOLTS. So that's what we got going. So 9:45 and 10, we have news this morning. I think the bigger thing is going to be tariffs. They come in being announced tomorrow, and we'll see. Market probably going to be all over the place today. We've seen earlier we had a little bit of strength in the overnight. We're getting some weakness now, but it could go either which way. So I mean, it's very hard to predict this, and the only thing we can do is just trade what we see. And at this point, the ES is down below that 5650 level again. They were up here, almost up to the 56.7 if they touched it, and then they backed off pretty good in the right in the close, but not a whole lot. They held this area, the 56.15, 5600 level, that held before the close. So I figured, okay, we have a shot at looking for that early strength. We got some of that in the overnight. At this point, looks to me like it's pretty much over. We may still see some strength here in the early morning hours right at the day start, but I would not be super aggressive on the long side at all. If anything, I would be looking at trading this on the short side still. Just to get started with the strength we had yesterday. Looking for some early strength to get short for rotations back down is kind of the dynamic. And so I would be looking for short setups against that 56.35s, 45s, 60s up to the 70s for rotations back down. That's kind of my starting point. And if they start taking out these lows, the 56.15s, what I had 20s, 15 to 20s, and the 56.10s, 5600s, these three support areas. If that comes out, we are back on the lower end of this. I think that 56.20 right here is pretty important. That's a pretty good ledge. They took that out pretty easily on the way up. The 2 o'clock pop yesterday. But now we've been down bouncing over it a couple of times in the 56.20s. And if that comes out, I think we may be right back down here, starting with the lows again. So starting off looking for some early strength to get short against if they start trading lower. We're going to be looking, there's buying opportunities against the 56.20s, 56.10s, and 5600s. But I would do that with a lot of caution because, I mean, if you start backing off here, I'm not going to be very aggressive on it. I'm going to be taking my time and waiting for a base to form. At least something which resembles a support area, you know. There's no rush to step in front of it on the way down here. It's just the recipe for getting caught. It's not that big of a range either. So I would best be a little bit cautious here, looking for a good setup if they're going to stall here. And if we end up doing that, we may get the range bound day. But if they take out that 5600s, that would be the last level I would look to buy against. I think we are maybe just down here testing the lows again. So that's why we get started on the ES. Looking to sell strength, 56.35s, 45s, 60s, and the 70s for rotations back down. And on the way down, looking to buy against that 20s, 56 20s, 10s down to the 5600s with a lot of caution. Looking for a good setup there. There's no rush to get long against this area. But if it holds, you may have a range bound day. That's kind of the way I'm looking at it. And if they start heading lower, I'm not going to be looking at very aggressive buying at all. That's going to look at trading that from the short trend anytime you can. So looking for short setups would be the way to trade this. Looking at the if they get down here to that 5560s, 5550s, there may be support area forming, but you know they can take this even lower. So the low of it was 5500. So I'm almost thinking that if a test of 5500 may be in the card. So we may be in for a pretty brutal day as well. It just depends. So and what the market is trying to do here. The tariff scare is, in my opinion, a little bit irrational. I think it's more of an excuse at this point to take risk off the table, and because they've been given these big runs up. But at this point, you're kind of late in the game, right? And you're taking risk off now. It's like, yeah, they're only down 15%. So what's the point? It can still go lower, but I think the support areas are going to be a lot stronger here after we get into April. And the lower 5500s, I think, are going to be pretty good. It doesn't mean that we can't get a probe and can't take them out. That's just, but this area down here on the 5500 is most likely going to be pretty close to the low end of this range. All right, so that's how we get started on the ES. Looking for early strength. Let's see if we can get short for rotations back down. And watch this area in the middle between 56 and 5620. That comes out, then we have definitely, then we're back down running it lower again. Okay, so that's the ES. Looking at the bonds and the NASDAQ. One market is heading higher. Pretty good move in the overnight so far to the upside. We are up against that upper edge, so definitely a pretty good move. Some capital flow, we are up here against this upper edge now, 118, 16 to 18. And if that comes out, we're going to be right back up here, maybe heading up to that 120 edge to test that one. Yields would be coming down pretty hard when that starts happening. So this still a flight to safety, I think. So if it's a rotation out of equities into bonds, it's kind of an artificial lift of the prices and the yields coming down in the short term, at least for a bit. So trade this on the long side of the market still. Would look to buy weakness, 118.16s, 118.8 to 10, 118s evens for rotations back up. If it starts trading back down below the buck, 118, take off the long bias, go back range bound. So that's the way I'm looking at it. There could be short setups against that 118.16, 118.20. This is that upper edge we showed you. And if that edge comes out, this upper edge comes out, then we may have a shot at taking this all the way up to the 120s. That would be a pretty good move to the upside. So that's how we get started on the bond trade. That's on the long side of the market to get started. And NASDAQ, that's the one which is going to be massively hammered. 22,500 or 300, whatever it was, the highs. We're down to like 19 now, so 3,000, almost 35, almost 3,000 or 3,300 points to the downside. That is a pretty good move to the downside. It's 15% shaved off the top of the NASDAQ. And a lot of it, more almost double that, is on the big tech stocks. A lot of them has been absolutely hammered. So, and hence there may be bargains now. Maybe bargain to get in on those. Anyway, so you see NASDAQ, they took out the lows, they probed right down here to the down in the 1800s and or 18,000s, and we are definitely in a pretty weak spot on the NASDAQ. So looking for the same dynamic that I was wanting them to get up above that 590, 600 level yesterday. They could not do it. So NASDAQ is the one I think almost leading us lower at this point. So looking to get short against strength, but at this point, against the 430s and the 490s, maybe up to that 550s for rotations back down. Looking to buy against 345s, 300s, and the 280s, these three support areas, with a lot of caution. If we're going to get the range bound day that this area might hold or should hold, then chances are we're going to get the range bound day today. But if they take it out, I would just be looking at staying on the short side and see how far they can take it. Now, it doesn't mean that it couldn't be long setups on the way down here. It's just that the chances of getting a good trade out of a long setup is a lot less likely at that point. And the better way to do it is to try to get short on a pullback and keep your stops tightened up so that you don't get caught in a snapback trade. So they're going to get short against strength at this point. Against actually, it almost should have a little level right there. Now I'm looking at it. Maybe I'll put one in there. Let's see. What am I looking at? I'm looking at this area right here. See that ledge? This is the mean and the mode of that overnight. So right there, small area. And then that could be interesting. So they're trading right there, pretty right there. But that would be an area to get short against the 400s, 440s, 500s, and the 550s for rotations back down. But anyway, so looking to get short against strength for rotations back down above that 550, 540 to 50 up here. We may have a shot at further retracement to the upside. And never rule out the market, never rule out the opportunity, the possibility. But at this point, there's no tariff announcements. There's a new quarter starting. We wrapped up the first quarter, so there's no reason for nothing has changed in the dynamic to start a rally. Put it that way. Doesn't mean it can't start, but I would expect the market to kind of be volatile until we get the tariffs and they digest the tariffs, and then maybe next week we'll see the market either take a leg lower or maybe even start recovering. So if they take out that 280, 19,280, I think they are right back down here, heading down to test the lows again. So staying on the short side if that starts happening. And then finally, oil and gold. Gold is absolutely melting up. Man, that is a crazy market to watch. So looking at that one, if you bought gold back at the 2000 mark, that was a good trade. Gold, I don't get aggressive on gold. I was looking at buying the ETFs for gold, but the problem with those is they don't do anything. They don't have any returns or anything. They have commodity value. So you can sit there and twist in the wind for years. Right now, though, it's if you sat on it, you've been in a pretty good spot. It's almost doubled since the 1600 level. So they remember that they started breaking out from the 1600. That was not too long ago, and now they almost doubled from there. So it's still a massive flight into gold. So we'll see how that shakes out as well. But at this point, trading from the long side of the market, look to buy weakness at 31.55s, 31.44s here for rotations back up. And if they start trading below that 44 level, look for a potential retracement trade back there. That was a little probe from yesterday, but at this point, they ran it higher all the way up to the 31.76. Hard backed off all the way to the starting point, bounced a little bit, and I will see if they're going to start taking this higher again. If this was just a probe to the upside, we can certainly retrace this pretty freaking quick. So it is light volume right now on gold, and not lightly, but there's not a lot of volume traded here. It's just in virgin territory. So where the support and resistance areas really are at is going to be something we'll find out. But early on here, we had some volume here at the 31.15s. We have some volume up here at 31.55s, but there's not a lot of volume to lean against. And we can easily retrace this back down and reverse retest that 30.60 level. When they do that, who knows? But that could be the day and the trade of the month. You get short and you get into that nice rundown when that happens. If it happens in a one big swoop, or if it's going to be more organized, hard to say. But it's anything moves up like this, chances are the elevator down is the likely path it's going to take. And it doesn't mean that it's going to devalue. It just means that it's a technical dynamic that you shake out weak long positions and run it lower just to clear the field if you wish. So looking to buy weakness, 31.53 to 54s, 31, 44s, 43, 44s here for rotations back up again. And if they take out that 44s, I would start looking for that retracement trade again. See if they can run it down here. Run it down here to the lower levels. The first one would be down here at the 30s. Then we're down to the 20s and lower. So it could be interesting, but gap up and then further extension like this, it's going to be some sort of correction at one point. It could be just a pure technical correction, but it's going to, one of them is going to happen. And oil from yesterday, the trade goal from the long side, as I said, and then oil, it's moving pretty good now. A little bit of volatility now, and there's potential for like secondary oil tariffs against Russia, and that would be the reason this market squeezes up like this. So once we get that settled or sorted out, we'll find out oil is going to, that the risk premium on oil is going to be, your tariff premium at this point is going to be taken off. But at this point, trade it from a range bound with a slight bias to the upside. And this repricing from yesterday, we'll see if that holds. If to start taking out that 71.15s, look for a retracement trade here down and reverse retesting 70s. Could be a nice short trade in there. But at this point, I would not be super aggressive on that. Unless you hear something about those oil tariffs changing. If that happens, oil is going to reprice itself again. But at this point, start off on the long side. Look to buy weakness. At this point, only down to the 71.15s, maybe down to the 70.60s. It could be a pullback to there just intraday. But I would be trading it from the long side, at least to get started. So range bound bias to the upside and see how far they can take it. We have a nice mode up here to 72.50. They may run up and test, but we haven't really taken out any big areas. We kind of back up in this upper range. They did take out they're trading up into this upper area right now. So back to that mode. So they starts trading above this area. See a nice volume node right there. It starts trading back outside that the upper edge. Well, yeah, then prices could go higher, and that would be just a result of that risk premium. But at this point, I think there may be a short trade setting up somewhere up here, but I would not be aggressive on that at all until I hear something about the tariffs or the oil tariff, energy tariffs getting taken off or sorted out one way or the other. So important to listen to the financial news at the same time as you're trading, because you never know when those announcements come. And if you see the market moving and then you start hearing about an announcement like that, even if you're not on top of the trade, you can potentially get on a move like that fairly early. And you saw what happened yesterday. Most of the day was to the upside based on that news. So sometimes you have time to do it. Back to the ES, and okay, so still looking at we're getting weakness, not much lift to get started with. So let's see what happens. It's April Fool's Day, so I'm gonna say good trading. We did a wink and a nod, and we'll see what happens here. So good trading, guys. I'll see you back at 11:30 for the next update later.